morning, everyone. Welcome to the European crossover webinar, and we'll take a look where we stand right now. We did see indices make a push here in the Asian session. They've actually backed off a bit here. Oh, wow. S&P's made it all the way up to 44.71. Take a look at the news. There looks like there is no news. There is unemployment benefit claims out of France. That's going to be in another 2 hours. And in the States, we do get durable goods at 8:30 Eastern. And at 10:30 Eastern, Dallas Fed manufacturing. So those will be the two. And then Bank of England Governor Bailey will be speaking. That'll be at 11 a.m. Eastern. As mentioned, we're pulling back. Interesting because, like I said, from what we closed on Friday, it looked like we may still make another push, but we are pulling back from that area here in the NASDAQ. Taking a look at gold, it's up a couple of dollars. And crude oil, oh wow, just continues to motor on higher. Look at that. Warn somebody about continuing to try and short this thing. Hope they're paying attention. With that, we'll just go on and start with the analysis. So the euro remains relegated to a tight range of 1675 to 1750. Resistance to start the week will be 1772, followed by 1883. Support will be 1641. So we're still hanging around this lower end, so it's going to be 1641. And on the upside, well, it's a little ways away from there, but it's going to be 1772. Before we can even get there, look at that. We got the 1750, so we might as well just stick with that till they offer some better sign of an upside. And we'll move on to cable. Appears to be holding up a little bit better than euro, though. Not much. Now, cable held the break last week, holding above 136. The pair remains vulnerable, although weekly support comes in at 35.75. The pair needs a close above 35.72. I meant to say this should be 37.52. To stymie new bears. Resistance beyond will be 35.78. So we're stuck, still holding in here. We haven't really moved anywhere. We're gonna go in and keep it simple, which 36 even will be the support. And we like to have the, for the start of the week, we kind of bigger, a little bit bigger lay of the land. So although one could maybe even consider right here about 36, right there, 36, 33 for support. This is the key one if we break beyond that. So I guess we'll go with that right now, which is going to be, let's call it 36, 38. And key is right now is 37.52. If we can get a daily close above 37.52, as indicated, that would stymie the new bears. We shall see. Obviously, the bias is still lower. And moving on to the Aussie dollar. Aussie, like the euro, is tethered to a tight 100 pip range. Immediate resistance will be 73.28, followed by 73.20. Support on a break will be 71.54. We are just stuck. We're just like going nowhere right now in these currencies. So right there, we're just going to go with that low right there, 72.18. And resistance, you can see right there, 73.28. Remains the same there. Moving on to the dollar yen. The dollar yen closed the prior week above 1062. Let's see right here, allowing for a challenge of 111, which will be resistance. Support will be 1038. And that will change to bullish with that close above 1062. And on to the cash dollar index. So the dollar index remains in a tight range of 50 ticks over the prior week. A break below 93 will find support at 92.61. Resistance will remain 93.56, followed by 94.08. And that's only if we break here, and we're certainly not doing anything like that. So considering where we're at, on a break, they're not moving very much. Once again, everything's trading so tight. Instead of starting out the week with more wider ranges, we'll keep it relatively tight. So if it breaks, we'll just go right here with 92.84. Currencies are going nowhere fast right now to start the week. Well, take a look at Bitcoin. We'd moved higher towards the end of the week, and then you can see here we took quite a bit of a dip. Then we pushed right back up, pulled back down. So looks like we're starting to have some trouble. Right now, that close 44,789 is going to be resistance. With support, and support will go right there, 43,083. Obviously still bearish. Moving on to the S&Ps. So the S&P futures will be targeting 43.85 as a key level for bulls to defend. Well, that's all incorrect. That doesn't even make any sense. That's not what I put, but we'll see here. Because I said right now, 44, they closed above 44, for whatever reason, I didn't say it, but I said they closed the week above 44.37. And you can see here, look right here. See right there, we get above there. So let's mark this off. I thought that was key. So they closed above 44.37, opening the door for a move to 44. Let me see what I did. I went to this bottom here, which is 44.71. I think that's where they went to. And we had resistance at 44.54. We actually moved beyond that. We went to the challenge area, which was this body, which is 44.71. Wow, that really meant it's key there. And support was going to be the breakout area, which is 44.37. I don't know why that thing didn't save it. And support beyond that was going to be 44.25. And you can see right here, see coming across right there, 44.25. But I went with the breakout area here, which I don't think that matches up. There you go, which is 44.37. Wow, they made it to 44.71. You see, there's the close right there. Interesting. NASDAQ remains weaker after S&Ps hit that level. There is resistance right here. I had it in the NASDAQ at 15,403. We'll move on to the NASDAQ. They didn't, I was watching this, they almost made it. They came up a little bit short. You can see here, the high was, I actually think they may have just gone just a hair a little bit higher because I think we had 98 here and it looks like they may have pushed it a little bit higher to 99. I have this level here at 403, but there's the better resistance comes in here at pull this up right there at 15,425, and actually I just caught, that's where I have this key volume coming in, pretty solid volume coming in right there, and I was looking at that would probably be where the market would run out of gas. And I'm talking about the New York Open. So this even surprised me how well they did in the Asian Open. So obviously they're weakening right now because we saw the S&Ps come off. But resistance is actually right here, 15,429. And the reason that is because the way we closed last week, when we broke hard, and then here we are rebounding, and they come back, they get knocked off, and then boy, do they come right back again. And they don't hold back. They just keep on pushing, which I think really had more to do with they had these shorts trapped. And so I mentioned on Friday, is wow, if you're short, you're just gonna have to cover. You have no choice. I mean, look at the way they're moving and closing. And really opens the door for them to go higher. How much higher would we see the follow through? We would have to see, but certainly we did see the follow through in Asia. I think that has to do with I saw here that Pelosi has Thursday they're going to have the infrastructure bill for the vote. So I think that's what kicked it up higher all of a sudden, kind of fading from that. But this is a big key area right here. And we'll go to that one now. So here's the area I'm talking about. Looked over it this weekend, comes in, it encompasses several days from, it looks like about the 11th all the way to the 17th. And you can see here, the low on that day, 425, the close 438, the close on this day, the 14th, which is 1514. The low of 15418, the upper area. You still see some pretty decent volume up in here. Look at this high volume mark here. Not a high volume mark, but a key volume, 451. So once again, that's what I'm liking that area. And I was thinking that they would kind of sit in here. Obviously, that I think that infrastructure vote is what pushed it. But we would be here, then we'd make a push. And I thought, okay, they'll run out of gas in here and pare back. But obviously, that looks like that infrastructure bills will push things higher or coming back. Support in the meantime is going to be 247. Forget that break here. That'll be key. 15,247. And moving on to gold. Gold finished the prior week sub 1750, holding at the support level of 1738. Support on a break will be 1718 with resistance at 1772. So the 1738 still remains to hold. After I go about 1737 here. And resistance, we'll mark here on the upside is going to be 1772. Obviously bearish. And crude oil. Crude continues on its rocket ascent. Monthly resistance comes in at 75.15. And support comes in at 73.81. You can see right here, and if I take this little wick right there, comes in at 75.15, and then beyond that would be 76.95. So that's where we're at. There we go. And NASDAQ still sliding a little bit more, 327. Kind of don't want them to slide that much because I'm hoping that they can still make that push up in the US session up in here, but we shall see. Okay, with that, there's the bias chart. We'll get that posted. And thanks for joining us here on the European Crossover webinar.